Excellent. Hi again, everyone. It's Emma here in Vancouver and just recording today's session in case anyone's wondering. So we will be posting that later today. And I'm here with Mark. We're going to get started in just a moment here. I'm just going to go through a couple of screens and then I will pass things over to Mark. So welcome again to Getting Your Invoice On with us. Mark's going to be presenting today. I'll be here answering questions for you. So feel free to type those into the GoToWebinar control panel as we go, and I'll make sure that we either answer them right away or definitely answer them before we wrap up today. And just a bit about our agenda. We're going to be going through a detailed overview of the different kinds of invoices you can make, different methods to create those invoices, whether they be time and materials, fixed price, or retainer. And then Mark's going to share some great tips with us to ensure your invoicing is seamless every time. So with that, Mark, I will pass things over to you. Are you there?
Yes, I am. Can you hear me
I
okay?
can hear you just great. Yeah.
Okay, awesome. Perfect. Yeah, you can make me presenter whenever you're ready.
Oh, yes, of course. That step. Haha. There we go. I should be doing that. You should see that now. Yeah.
Okay, great. And you're able to see my screen on your side there, Emma?
I am. Yeah, that looks great. I see your dashboard now.
Okay, perfect. Well, thank you everyone for joining in today. I just want to talk a little bit about the purpose of today's webinar and how it connects to the rest of this particular series. So as many of you will have seen in the information that we sent you, the emails that have gone out about this webinar series, our main goal with this series is to help everyone to get a better understanding and improve their usage of the Function Point QuickBooks integration. So using FP accountants to integrate Function Point and QuickBooks. Now that being said, this is a multi-part webinar series, and this is, of course, the first. And the purpose of today's webinar is really to cover invoicing and also a bit on expenses. One of the prerequisites of being able to integrate with QuickBooks is, of course, being able to have your invoices and your expenses created and accurate and in Function Point so that they can then sync over properly. So there's a few prerequisites to go over before we actually jump into the actual QuickBooks integration. And one of those things is setting up FP accounts. And one thing that we've done is we have created some videos, and I believe that the links to those videos would have been sent to you along with some of the information about these webinars. But they're easy to find on the support site, of course. But it would be important. You'd want to make sure to watch the setting up FP accountant video. If you're already set up with FP accountants and you're confident with the way that it's working for you, then don't worry too much about the setup video. But I'd probably recommend checking it out anyways. There's also a video on its use, and the information covered in the video on the use of FP accountant is going to be covered in our next webinar, which is going to be next week, a week today, next Thursday, which is going to be covering syncing and integration and all the things FP accountants and QuickBooks integration. So watching those two videos is important. This webinar is important, as I mentioned, to make sure that you understand invoicing and expenses. And if you happen to not be using QuickBooks, if you happen to not be using FP accountants and don't plan on doing so in the future, and I'm not sure if we have any clients on this call that are meeting that criteria, I definitely recommend staying on because I'm not really going to be touching too much on actual QuickBooks. Again, this webinar is focused on invoicing and expenses, which is applicable to all our clients, regardless of what accounting system you might be using. So just to kind of go over what we are going to be covering today, the very first thing we're going to cover, just to get it out of the way, is the entry of an expense. And I say get it out of the way because it's pretty simple. There isn't really much to cover there. I just want to show it really quickly so that everybody's clear on entering the expense. And then we're going to go through a series of invoice scenarios. And what they're going to be is creating an invoice to a time and materials job, creating an invoice to a fixed price job or a project-based fixed price milestone billing. There's a lot of terms I hear to define that. We're then going to be taking a look at invoicing a retainer job. We're then going to be taking a look at invoicing a list of time and materials jobs all at the same time. We're then going to be taking a look at invoicing a list of fixed price jobs all at the same time, which is a really interesting one, and it's a bit tricky. We're then going to be doing an example of invoicing multiple retainer jobs all at the same time. So, those kind of three different types of billing, one at a time, and then also in a multi-selection. And then the last two things we're going to do is we're going to create a deposit invoice at the company level. Actually, you know what? I think we're going to do it at the project level, which is essentially the same thing. I'll touch on what that means. we're then going to be doing a deposit invoice at the job level. And with both of those deposit invoices, I'm going to be talking a lot about what that means and what it's used for and what it's not used for, so that people have a good grasp of what that feature is meant to do for you. And then for each of those, I'm then going to pay back the deposit or take away from the deposit or reduce from the deposit, depending on how you kind of want to call it. I'm gonna show you a workflow process for those deposit invoices and kind of how it's supposed to work. So that's really going to cover every single type of invoice and way that you can bill in the system. Now, as Emma mentioned, please do feel free to ask questions as we go through. Ask them in the GoToWebinar question box there. And Emma's going to be checking in with me. I'm going to be checking in with her, asking if there are questions and if I'm able to answer those. Some questions she might answer for you in the text box. Some she may ask me to show, depending on the complexity, because of course invoicing and billing and expenses, these are complex topics sometimes. Depending on the complexity, we may not be able to give you an answer right away. I think most of the time we will be, but if it's something that we do need to take offline, then do know that we will gather up any questions that we're not able to answer, find answers for them, and then follow up with you and provide those to you. Now, one last thing I want to mention before we jump in is that, I was saying to Emma before the call, I asked her if it was okay if I said this. We don't really have a time cap on this thing. We're not limiting it to 45 minutes or even an hour. That being said, we've got to get lunch eventually, so maybe an hour and a half at the most. But at the hour point, we should probably cover everything, depending on the amount of questions. But we're going to stay on and answer questions until you guys are completely done asking them. So don't worry about if you're not going to be able to get your question, and we're going to make sure to get to them all, or at very least log them so we can answer them later. Looks like my computer's asking me if I want to update as it does on an hourly basis. Let's get rid of that. Perfect. So without further ado, let's jump in. Right now, we are looking at a dashboard of Function Point. We're looking at my demonstration version that I created for the purpose of this webinar. And this, of course, would have your banner along the top section here as opposed to ours. Now, the dashboard I'm looking at is what I have created to refer to as an owner dashboard. It's giving us some graphics that the owner or the creative director or the principal at an agency might be interested in, such as a billable utilization summary, a profit analysis, a profit summary, timesheet, task time, job summary. Very graphical, business intelligent view type of dashboard. And I know this isn't really on the topic, but I do like to mention it because a lot of people don't know that you can put all these different types of neat dashboards together with neat visuals and different ways of laying information out, and there's lots of options here, and I do recommend checking these out and playing around with them. So go ahead and customize your dashboards and get creative with them. Now, as I mentioned, the first thing we're going to do is we're going to add an expense to a job. And if, let's say you know the job you want to add an expense to, and if that expense was estimated on the job, then it's really easy to do so. What we would do is we would navigate to the Jobs Details page. We would look at the Financials tab and see what are our expenses. Now, I have a printing expense here that was estimated for $2,500, marked up to the client to $3,000. We have not put any actuals in for this yet. Now, if I know the job and I know the expense and I want to add a purchase order or a vendor invoice to it, I'd click on the plus icon beside the expense on the Job Financials tab. That is going to bring me directly to my multi-line expense entry and fill in all of my details that existed, such as the expense type and the value and so forth. However, if you don't know the name of the job, or maybe you just don't want to navigate to it, or you just want to add an expense quickly, you can choose to add an expense at any time. Hover over expenses, hover over add, select add an expense. Choose our supplier. I'm going to say we're working with a company called Starboard Custom Printing. If there's a reference number or invoice number that's been provided by the vendor, and that may not be something you have at this time, but it is important. I'll touch on that in a second as to why. We then have the overall description of the expense, or of the overall purchase. The reason I say overall is that this is a multi-line expense system, meaning you can add in additional line items. And the top expense is the description of the overall purchase order or overall vendor invoice, whereas the sub-descriptions are the description of the specific line item being purchased. We then have some fields at the bottom here. Quoted for PO. This field controls the dollar amount showing up on the vendor-facing purchase order, if we should choose to produce one. Select our job. The one we were looking at there had a number of 30322. If you know the job name, or you know the number, or you know the client name, you can type that in and it'll give you the result. Choose our service group. I believe we had an expenses service group there, or perhaps not. Creative services, actually. Choose our expense type. So we have our printing expense here. Notice it says $3,000 estimated. So let me know this job is an estimated value of printing already on there. Select it. Notice that the QuickBooks cost of goods sold automatically fills in. Now this is really important with regards to FE Accountant and integration with QuickBooks. The expense type needs to be tied to the appropriate QuickBooks cost of goods sold. Now if it's not, you can manually select that. You might have one generic item that you use for everything, or you could have separate cost of goods sold for all your different expense types. But in order for this to go over to QuickBooks properly, this does need to be filled in. I can then enter the specific description of the actual expense, and then our quantity and rate. So maybe we're purchasing, let's say 2,000 items here, and let's say 5,000 items. Purchasing 5,000 items, purchasing it at 50 cents a piece. Check any discounts we're getting from our vendor. Any tax groups that are applicable for the purchase. Tip amount is relevant for things like a cab or a meal. Markup percentage fills in automatically based on the client and the expense type or the job that you selected. If we do want to override the percentage or enter a dollar override, then we can. Click Save, and that is our expense created. Now up at the top we have a button that says Unposted, and that is what is going to allow us to send this to QuickBooks, just choosing to select this, which will change the status to Posted. Now, the number that goes over into QuickBooks is typically the reference number. Therefore, in order for this to sync with QuickBooks, you do need to have a reference number, as well as the QuickBooks cost of goods sold tied to the expense type. Now, the videos that I was mentioning earlier cover in a very specific, a very fine level of detail exactly what this is all about, tying the cost of goods sold to the expense type. We're going to be covering it briefly in the next webinar, but the video does cover that in detail. But that's the process for adding the expense. It's very simple. You just fill out the fields. We can then choose to produce our vendor-facing purchase order if we should require one. And then if we look at the job, we're then going to find this expense on the job. And that brings me to the next step, which is adding a single invoice to a job with a work type of time and materials. Before I jump into the actual invoicing, I just want to check in. Emma, do we have any questions at all?
Hey, Mark. Thanks for checking in. No, we don't have any questions as yet, so everyone do be encouraged to ask. But yeah, nothing yet, but appreciate you checking in.
No problem. So one thing I want to do here before we take a look at adding that invoice is I want to talk a bit about some terms. And I have a cheat sheet here. Now this is the same cheat sheet we used for the last invoicing webinar. This webinar is covering some things we didn't cover in that one, but I want to touch on this, and we can email this to everyone after the webinar as well. It is available on the support site too. But this touches on a few things around the process for invoicing. I'm going to be talking about this a bit as we go through. One thing I want to touch on here is what we call a work type. You'll notice that in the box down below, there's 4 different work types. And I have 4 work types in my system. We call them actual billing, and this refers to billing for time and materials, all unbilled time and materials, so all your time and expenses that haven't been invoiced yet. A work type of retainer, pretty straightforward. You're billing the client a set dollar amount every single month. Project-based. Project-based is billing the client a fixed fee, a percentage of the overall project budget. You might have a $10,000 job for a client. You plan to bill them $2,500 when they sign the agreement. Maybe you bill them another $5,000 in a milestone, and the remaining $2,500 upon completion. That is project-based. It's a fixed fee. It doesn't matter if you put in $5 grand worth of time or if you put in 25 grand worth of time. You plan to bill that client that $10,000. Now, of course, life isn't always that simple. Maybe there's some factors that might change the value up and down a bit, but the concept is it's a fixed price. It's not time materials. We then have pre-bill, which is billing based on a deposit. Now, if you're a newer client with Function Point, these work types should be loaded into your system. If you've not been using the system for a while, you may not find them there. And if you want to add those in, which is something that I do recommend that you do, you'd want to go into the admin section under System Setup and under List Maintenance. And that's where you'll be able to find the work type field and adjust to add in those work types. Now, if you prefer different terminology, no problem, but that is what a lot of our help documentation is going to refer to as those 4 work types. Now, I'm going to touch a bit on the process for how staff people can notify, say, a bookkeeper as to how they would or when they should go in and invoice things. And that is a bit controversial in that different agencies do it in different ways. Before I get into that, in this example, I just want to show you how to create a single invoice to a job for time and materials. So I'm going to navigate to my job, and I'm going to look at this winter driving school program brochure. Not the greatest name since we are approaching summertime, but we'll use it anyways. So we're looking at the jobs details page for this job here. And if we look at the financials tab, what we're going to find is an overview of the scope of work structure of this job. This job had, one category with some internal services and some external expenses. I can see the hours that have been put in. I can see the expenses that were estimated. Sorry, my apologies. The hours that were estimated, the expenses that were estimated. I can then see the actual values, the hours and the expenses, their hours and their units, the cost value of the work, the actual or billable value of the work, the variance between your estimated and your actual, how much you've invoiced the client so far, and a balance outstanding. Now, this being a time and materials job, when I look at this, I can see that we estimated $14,200. We've put in $9,970 worth of work. We invoiced her $1,200. So it looks as though last month we did $600 worth of work of design, $600 worth of work of production, and we just did a little bit, and we invoiced that because this is a time and materials job. Therefore, we're going to invoice all the work that we do. Now that $8,770 is the value of all unbilled time and expenses. So if I want to create an invoice for the value of all unbilled time and expenses, what I would do is up at the top, I would choose to add an invoice. In this case, we'll say it's an interim. We're going to touch on deposit later on in the webinar. Final marks the job is completed, then we'll archive it. So if this job happens to be complete and done, then we'd want to select final. You can also manually put it into a final invoice or closed status if you wish. But what I'm going to do is I'm going to choose to calculate from remainder from actuals. And that is what that cheat sheet is going to tell you to do. Actual billing, you calculate remainder from actuals. Now what remainder from actuals means is that it's taking the value of what you've invoiced and subtracting the value of the work that you've done. Or you could look at it the other way around. The value of the work that you've done subtracted what you've already invoiced. When I click create, it's going to calculate all of the unbilled time and expenses and automatically generate an invoice for me for those amounts. We're now looking at the invoice details page where we're going to get a similar view to the financials. Estimated, actual, variance, how much we are invoicing right now, previously invoiced, and the remainder owing. Now the remainder, because it's calculated from actuals, equals the amount that we tend to invoice because we're invoicing the value of all unbilled time and expenses. If I want to know where these values are coming from, $1,220 for research, I can click on the arrow beside the service. I'm going to get an overview of the timesheets that I'm invoicing for. And they're all selected. Now, if I wanted to play around with this a little bit, maybe I don't want to invoice just the unbilled time and expenses. I want to kind of do my own thing. I might open this field up, click on the invoice column, it'll clear it out. I can then go in and simply just choose what timesheets do I want to invoice. If you watch this column, notice the value as I select timesheets is adding up. It's adding in the value of the timesheets that I'm selecting. So I can go in and select and deselect all the different timesheets that I may want to bill or not bill. But in this example, as I mentioned, we're billing remainder from actuals. So when I click on the remainder value, it fills in the value of my remainder. It also fills in the expense value because we have a $3,000 expense that we have not invoiced for. It's an unbilled expense. Therefore, remainder from actuals, aka bill all unbilled time and expenses, is giving us our $3,000 for that unbilled expense. So the process is really simple. If you just want to bill all your unbilled time and expenses, you hit add invoice, you choose calculate remainder from actuals, hit create, and everything is done. It takes 2 clicks. And so there's our 877. There's some taxes on this item. Click save. and that is our invoice created. But at the top, we can choose to produce our client-facing version. And on the last webinar in this session, in this series, I'm going to touch on all the different ways you can customize and tweak and give a lot of really good tips on ways to set yourself up to have different styles of invoices to send to your clients. And that's going to be a useful item, so stay tuned. But like everything else, of course, there's good documentation on that in our support site. And of course, most of the documentation is created by Emma, so thank you very much for that. So that's the first check mark on our list, which is creating a single invoice to a time and materials job for all unbilled time and expenses. Any questions before we move on to the next, Emma?
Hey, Mark. We did get one in, and I just want to make sure I've answered Lindsay correctly. It's a little bit more to do with expenses. Lindsay had asked and said that her COGS QuickBooks accounts often don't match the expense type and was wondering a bit about that. Now, I thought that might be a naming issue, but you may know a bit more. We may need to take that one offline.
Okay, the COGS. I'm always hesitant to call them cost of goods sold items versus cost of goods sold accounts. But the COGS don't necessarily match the expense item. One thing I want to mention is that I do highly recommend watching the setting up FP account video, because it's going to answer that question in a very, very detailed way. It's going to give you the exact answer that you're looking for. But I do want to answer that for you now really quickly. And I'm not going to go into as much detail as the video. And furthermore, I'll touch a bit on this on the next webinar as well. But just to quickly answer that question, in the admin section under integrated accounting, we have an area called set of QuickBooks integration. Now this is where we were able to see all of our internal services, external expenses, and internal expenses. Now this is where you will find a list of your external expenses and the QuickBooks cost of goods sold that they are tied to. Now in a case where you have a one-to-one match, so something like printing. Now printing, I happen to have a QuickBooks cost of goods sold called printing. So therefore, it fills in, no problem. I have two. I'm actually not sure why I have two, but I seem to have two there. Now, if you do not have an exact match, you're going to find a drop. You're going to find an item that says select QB cost of goods sold. I have this shipping expense. It's a FedEx foreign envelope expense that I might want to add to a job. So I'm not going to have a cost of goods sold for that. That's way too specific. I don't want a cost of goods sold for that in my accounting system. So I have a generic cost of goods sold called expense. And basically, anytime when I go down, if I see the word select, I need to select a value. And I may not have a cost of goods sold that is going to match my expense type and function point exactly. In fact, it's pretty rare if you have a cost of goods sold for every single expense type that you might purchase. So you'd want to have a generic cost of goods sold that you tie that expense type to. And that is why they may not match. It's not a bad thing. It's not a problem with that, unless you are really meticulous about it. If you want every single expense type to have a corresponding cost of goods sold that matches it exactly, all the power to you, no problem. But that just means that you need to go into QuickBooks, you need to create those, and you need to run the full sync. But again, I do recommend watching that video. It's going to give you a really good overview of exactly all of everything I just said and a bit more. So I do recommend checking that out.
Great. Thanks, Mark. And just wanted to point out as well, you've been referring to that excellent little cheat sheet that Karen had made for us, and everyone is going to be getting a copy of that. It's available now on the training under help and training. You can find it there, but you will also be getting that in a follow-up message once the webinar is over that's going to link back to some pertinent documents. And then the videos that Mark's referring to are also available in the help section. They're also, you can find links to them on the sign-up page. So where you signed up for today's webinar session, there is a link to both those videos that Mark's talking about as well. So thanks, Mark.
No problem. Thank you. Okay, so let's jump into the next type. The next type that we have here is invoicing a fixed price job. And what I'm going to do is I'm going to do a job find. And I'm going to do a job find based on a work type. And I've talked about the work type. It was when we were talking about the actual billing, retainer, project-based, and pre-bill or deposit. And I want to see all of my project-based jobs. And I want to see all of my project-based jobs that are open or in production. I'm going to click Find, and that produces the result of that search. So I have 12 jobs that are open or in production that are a project-based job. Now, one thing that I want to touch on super quickly, and stop me if I go too long on it, is the awesomeness of the new list views. I was a bit skeptical at first. When I was first kind of told about the upgrade, I thought, hey, it's kind of cool, but I don't know how how great it's going to be. It's kind of neat, but whatever. And then I got my hands on the ability to customize these list views, and I've been so excited and stoked on it ever since. You are now able to really customize any list that you find in the system. You find a list view, and up at the top, you're going to find an option to manage these columns, and you can add and you can delete, you can reorder, drag around the columns, and whatever you select here, whatever you structure the list you like, is then going to produce in the resulting PDF print report. Some really awesome stuff here. So when I was setting up for this webinar, I made sure to put in my work type as a field in my list view. It wasn't there before, but I can put it in there now. So what I've done is I've done a search based on work type, project-based. Show me all my fixed price jobs. Now I have one here that I think is going to be a good example. I have a job here called dealership signage. And this dealership signage job, it's due on the 12th. It's open. It's project-based. We estimated $15,000. We've invoiced for $7,500. We've only put in $5,800 worth of work. But maybe our team was incredibly efficient, or in fact, maybe actually it's not done. Maybe my scenario here is we have reached a milestone. We've provided the client with our close to our final design for the signage, and they've signed off on the fact that we can bill them another 25%. 7,500 is half of 15,000. We're going to bill them another 25% because the client has let us know that, hey, we are now ready to pay you another 25% based on the fact that we're happy with these designs, and we get that you guys are 3/4 of the way done. So what I'm going to do is I'm going to click on the name of the job, and that's going to bring me into the jobs details page, just like before. Now here again, we can look at the financials and we can see an overview there. Also, the summary is going to show us some things too. For example, we estimated $15,000, $5,880 is our actuals. We've invoiced $7,500. Some cost values are pretty profitable on this so far. Again, the scenario here is that we've done about 3/4 worth of the work. Forget about the fact that we've only put in a third of the actual value. We've been really efficient. We've hit that 3/4 mark, and the client has agreed that we can now bill them another 25%. So what I'm going to do is up at the top, I'm going to choose to add invoice. Now, because I am billing a project-based job here on the cheat sheet, notice it says when you're billing a project-based job, you're going to calculate from estimated. Now, in this case, we're going to say that we want to bill 25%. It's really easy. And the billing percentage, we say I want to bill 25% of my estimated value. The estimated value is that $15,000. The agreement we have with the client is we're going to bill them $15,000. Let's say in this case it was going to be half up front, as we have. We billed them $7,500 already. 25% upon a milestone, and the final 25% upon completion. We are now ready to bill them that 25% upon the milestone. Click Create. And that's it. Invoice done. Ready to go. Go get a coffee. It's now created. We're now looking at the invoice details page. And just like before, we're going to get a bit of an overview here. It's going to show us our estimated and our actual and our variance. And we've actually gone over on our research. We've gone over on our rough drafts. So at a high level, it looks like we're really efficient, but we've actually gone a bit over budget on some of these things. But we're under budget in design, or under budget in copy. The invoice value equals 25% of the value of the estimated column, because that's what we put. We put in 25% of estimate. So, there's no work to be done here. Once you hit create, we've created an invoice for 25%. We can now produce our client-facing version, save it as a PDF, and attach it to an email, or we can choose to notify the clients and select this and have the system email them that PDF as well. But that's the process. If you're billing project-based, it's really simple. Now, as I mentioned earlier, it's not always that simple. The clients and yourselves might have different types of agreements, and they might say, well, we realize that you guys need to send us an invoice for this, but we'll give you some leeway on your next job, but right now I really need you to only be billing me maybe 15% of this, or anything like that. If you need to go in and make a change based on whatever you need to do, you could adjust the billing percentage, 15%, click on estimate, and change the value to 15% of our estimate. If you say, well, I really need to bill the client for all this extra, research work that we did. I want to bill them for the extra research work that we did. We have $780 here. We've already invoiced $250. I can calculate the remainder and drop in that remainder from actuals if I want to. The remainder from actuals is $530. So maybe I decide, we're going to bill 15% of estimated, but I really need to bill them this $530 for research. The point I'm trying to get here is that you can use the columns to automate the values. 25% of our estimated calculates it for us very easily. But you have full control over this. You can customize any amount that you want because life isn't always as simple as just a quick calculation like that. Click Save. That's our invoice created, and we've created our 25% invoice. And if we go back to the jobs list here, then we're going to find our dealership signage now has a value of $11,250 as the invoice amount. And that's an overview of doing a single invoice to a fixed price job. Any questions on any of that so far? About anything come in?
Oh, hey, Mark. Nothing specific to that as yet. We did get a good question in from Lindsay that I'm going to take offline just to look into for her. And then Maureen's reached out in regards to retainers, but I think we are going to be covering that today, if not today, in a future session, correct?
Actually, yeah, we definitely are. The retainer is the next item on my list, so we're going to jump into that retainer right now.
Okay, perfect. So, Maureen, I know you sent a great, extensive, long question there, which is great. So thank you for all that detail. So I'm just reviewing that now, and then I'll make sure that Mark addresses as much of that as we can in today's session for you. So thanks.
No problem. So let's jump now into the retainer. Now, I just want to mention a few things. I know that we're at 30 minutes, into this webinar, and I was expecting to be a little bit further along, but I'm a slow talker. So, but I just want to mention that where we are right now is we've done a single invoice to time materials, single invoice to a fixed price. We're now going to do a single invoice to retainer job, and then what we're going to do from there is we're going to be looking at multi-invoicing, and I think that's going to be really important for everyone. So I just want to, let everyone know just to, hang on to their hats and be ready, because we're going to be looking at some of that multi-invoicing stuff, which is going to be really important as soon as we get through the retainer. That being said, the retainer is something that I want to talk about some scenarios and give you some different examples. So what I'm going to do is I'm going to do a job find for retainers, and I'm going to look work type, and I'm going to see show me my retainer jobs that are open or in production. Click Find, and that gives me the results of my search. And actually, just noticing here, I'm seeing a few items that I wasn't expecting to see these particular guys there. I don't really want them there actually. So I'm going to do a job find again. I'm going to narrow this down to job type retainer and work type retainer. I wasn't actually really expecting to see those other guys there, and I don't really want them. So let's do a find. There we are. So here's a list of jobs I created for the purpose of showing this, and I have in total 6 retainer jobs here. 5 of them are simple examples, and then I have one more detailed example, which I think is going to be applicable to a lot of you. Now, let's look at this one, our social media services. Now, let's talk a bit about a scenario. The retainer, you're going to bill the client the exact same amount every single month. In this example, my amount is $2,500. I'm going to bill the client $2,500 every single month, and I'm just going to be doing work for them as they request it. Now, in this example, the social media services, it's really, really simple. I don't have new jobs coming in all the time. I just have minor things I'm doing here and there. I'm updating their Facebook banner. I'm updating their Twitter background. I'm doing minor things here and there. Maybe I'm responding to some client feedback on their behalf. I'm doing these social media services for them, and all these different things don't require their own separate jobs. Maybe I'm creating tasks for those things that come in, but they don't require their own separate jobs. This job is incredibly simple. Social media services consists of a single line item called SEO services, and I estimate about 25 hours per month that I'm going to be doing of this, and we're charging $100 an hour. So far this month, I've put in 8 hours, and that's at $800. We've used $800 of our $2,500 retainer, and we haven't invoiced anything. Now, when I say this month, I'm referring to the date range that I put in here. If I'm wanting to see what did we spend last month, I'll put in a date range that would be last month. I'd come in here and I'd put in, April 1 to April 30th, and then I would filter by date. Now, I'm not going to have any values, so it's going to be 0. But if I had values last month, we'd see that. Let's take that off there. So again, the date range is allowing you to see what is the value of the retainer compared to the value of the work that you put in on a month-by-month basis. Now, as I mentioned, this job is really simple. It doesn't require a job for every single type of thing that's coming in. If the client calls up and says, hey, can you put in an album on our Facebook page that's is related to the last event? I go ahead and I put in that album. Maybe it takes me an hour. I just go in and I add a timesheet to this job. I just timesheet, add timesheet or open up the timesheet window, and I come in here and I say, well, I'm working on my job 30334, and there's only one option, and it's SEO services, and I spent an hour and a half doing the photo album on Facebook, and I submit that, and that's it. Now, if the client calls me up and says, hey, can you put in this photo album, and I want to assign it to somebody else, I would just add them a task. I'd select that task, assign it to somebody, say, hey, upload this photo album, put in some details from the last event, and track your time against it. Now, when I decide that I then want to go ahead and invoice this, notice now my value is 9.5 hours. It's really simple. I want to invoice this retainer job. All I do is I hit Add Invoice, and then from here, all I do is I hit Create, because the retainer, when we're doing a retainer, we're doing an estimated value of 100%. Notice this, if you leave it blank, it automatically chooses 100%. The structure of the retainer is the value of the estimate represents the monthly value of the billing. Therefore, all I need to do is hit Add Invoice and hit Create. And it generates my invoice for $2,500. There's some tax on this item too. But $2,500, that's the value of my retainer. I hit Print, produce my client-facing version, and we're good to go. Now that is an example of a really, really simple retainer where we don't have sub-jobs. Let's look at another scenario. This other scenario is we speak to a client and we say, okay, well, we're going to be doing this retainer for you, and we're going to charge you $10,000 a month. Now, for that $10,000 per month, you can request new work for us any time in the month. We're going to give you a heads up when we're approaching that, the end of that budget, and then we can have a conversation. If it's halfway through the month and you're at $8,000, we're probably going to give you a call, and we're going to have a talk and say, are you planning on sending us a bunch more work for this retainer this month? If so, I should let you know you're pretty close to your budget. I'll tell you what, we're going to invoice you at our discounted rate for anything that you do go over the retainer, but anything that you do go over that 10 grand, we're going to bill you for separately as time and materials. But this retainer, and let's go back to our jobs list, this retainer is much more complex than the one we just spoke about. This retainer I'm speaking about now might have multiple jobs beneath it. And when you have a case where you have a single retainer where the client might be requesting jobs that are more detailed, it's not uploading a photo album. You might be doing an entire online ad. You might be designing a billboard, car wraps, things like that. And these jobs, they could require schedules. They could require, detailed workflow processes in order to complete each one. The way that we set up this type of retainer is through a project. Notice I'm looking at the project details page, and I've called this one NAG Agency Retainer. And the structure of this retainer is as follows. I have a billing job. That billing job represents the value of the monthly retainer. The value of this monthly retainer is $10,000. We expect to put in about 100 hours per month. We're charging $100 an hour. The value of the retainer is $10,000 per month. Now, any single time that the client sends us a request for new work, we're going to add in a new estimate/job. So far, I have car wraps, billboard, online ad. Each of these have some values. The car wraps item has 21 hours against it. That's made up of some hours in research, some hours in sketches and rough, some hours in design. And we've done 5 hours of design this month for the car wraps. Now, the client calls me up and they say, hey, we really need, some new window signs for the dealership, and it's, that's part of the retainer that we have. So what I'd do is I'd go into the project, NAG Agency Retainer. I'd select Add Estimate. and this is going to be, window signs, for the dealership, and this is, it's a display, and they told us that they, so this is a quick one. They need it, we got to get it back to them by, let's say, the 22nd. So by the 22nd, we got to do these window signs, and there is going to be no estimated value, but if I want my team tracking against this, which we do, we want to know how much we're spending on the retainer. They can track against research and design and copy and product line management, things like that. Submit this, and then select Add Job. Now what I've done here is I've added a new job to the project. Go back to the project details page, and what we're going to see is we now have a new job called Window Signs. Now Window Signs does not have any estimated value. All the estimated value comes from the billing job. This was the very first one we created to represent the value of the retainer. The Window Signs job now has 0 values actuals because we haven't done anything yet. Now I might go into that Window Signs job. So if I click on the Window Signs job here, I might go in and I might add a schedule. Maybe I add a creative brief. I'm adding notes, I'm adding tasks. I'm doing all this work for this Window Signs job, and I'm tracking a bunch of time against it. Let's track a quick timesheet against this. This is going to go against our Window Signs job, and right now we're just doing some initial research on the previous campaign. The last quarter they had a bunch of window signs. What did they look like? It took me about an hour and a half to look at those with a description and submit. Now when we look back at our project, what we're going to see is on the Financials tab that so far we've estimated 100 hours. That is the value of the monthly retainer, and we've put in 71 hours. Now when you first get to this page, if you in this style of retainer, after you've had it for a few months, this number here is going to dwarf this number here. It's going to be significantly larger. When you first get here, it's going to look, you might have 500 hours here. You're going to say, holy crap, 100-hour retainer, we put in 500 hours. It is very important to note the date ranges. This allows you to say, from May 1 until May 31, and today's May, oh, my apologies, from May 1 until May 31, filter by date. The values are not going to change because it's all in May. Filter by date, that's going to show us for this month, for our 100-hour retainer, we've spent 71. And this jobs list could just grow and grow and grow and grow and grow, but it's this job, this billing job, that represents what we're going to bill every single month. Now invoicing it is really simple. I can choose to add an invoice from here. If I select create invoice, it's going to bring me to a multi-invoice create. I'm just creating one. I'm just adding one invoice. So there's no problem with that. But what you'd probably want to do is you'd want to select the billing job, and then you'd want to add invoice. Now, most of the time with your retainers, you're going to be doing this in a multi-invoice create. You're not often going to be doing them one by one. But all you would do is just like the other retainer, the simple one I showed you. All you would do is for the billing job, you'd select to add invoice, and you would bill 100%. Blank equals 100%. It's just default to 100% of estimated, and you hit create and invoice that. The reason I'm not going to create this invoice right now is I want to save it. I want to show you what it looks like to do a multi-invoice create for all your retainers all at the same time. It's much quicker. It makes much more sense for the process of a retainer to do a multi-invoice for all of your retainer jobs all at the same time. But again, I'm wanting to show you that the structure where you have a retainer where there's a lot of different jobs and each job requires a schedule and a brief and notes and they're all detailed jobs, you use a project for that with a billing job with a value of the monthly retainer. Hope that makes sense. The next thing we're going to do is jumping into those multi-job invoices. And I think what I'll do is I have retainers, a third one. I'm actually going to do retainer first because we've been talking about it so much. But I want to check in again. Emma, any questions or anything so far?
Oh, hey, Mark. We've had a couple of questions. I hope I've been able to answer them just through typing answers back. So I think we're okay so far, but everyone feel free to keep them coming. And anyone, if I haven't sufficiently answered, just let me know and we can put it to Mark, or I'll to make another attempt at answering you better. Thanks.
And feel free to interrupt, Emma, if you want to let me know about something. You won't hurt my feelings, so no problem.
Thanks, Mark.
Okay, so the next thing on my list was to look at multi-invoicing for time materials, but I'm not going to do that. I want to show you instead multi-invoicing for retainer jobs, because this is typically how you're going to build them. I showed you a minute ago invoicing a single retainer job on its own. That's fine. You just go to the job, you hit Add Invoice, you hit Create, and you're done. Here's a more common scenario. You have a bunch of retainers. Maybe they're all for different clients, and you're going to invoice them all at the same time. So what I'm going to do is I'm going to do a job find. I'm going to say, show me all of my retainers, work type retainer. Now the job type, I apologize, it's not really applicable. The purpose of the work type is typically to say this is how are we going to bill this, and the retainer, that's how we use it. The job type could be anything. You could have a retainer for web work. You could have a retainer for SEO work. I mean, the job type would typically be more specific to the type of work being done. The only reason I have it here is I noticed some jobs that shouldn't have been in that list, so I want to narrow it down a bit further. But let's see all our retainer jobs that are open or in production. Click Find, and that produces the results of our search. So here I have a list of all of those jobs. Now, I've actually already invoiced social media services. We already invoiced this for $2,500 this month. That's not a very common scenario, because the more common scenario is you're going to invoice all your retainers all at the same time. Now, notice that I have 5 examples that are those simple ones. SEO, social media, web maintenance. The way that I know that these are simple retainers is because there is no project. These are just simple retainer jobs where we're just tracking time against them. When I see a project here, that's letting me know that there's a project, in this case, North Shore Auto Group retainer, and I have my NAGR billing job. I'm not going to find any of those other jobs. I'm not going to find car wraps. I'm not going to find online ad. I'm not going to find window signs, because those are all sub-jobs within the retainer. All I'm going to find, if my work type is set up correctly, is the billing job. Now, you might have 10 billing jobs here, and each of those billing jobs might be part of a project under which you could have a whole bunch of different sub-work you're doing. But the point I'm trying to make is all you're going to find is your billing job, and it makes it really easy to invoice all these jobs at the same time. All you do is up at the top, you select the Batch Invoice Add. So again, from a list view, from a jobs list view, the top right, select Batch Invoice Add. Now it's going to bring me to an invoice add here, and I'm going to call this May 1 retainer. And then it's really easy. It's literally estimated blank, which equals 100%, and then you just hit create, because we're billing 100% of the estimate. The estimate represents the value of the monthly retainer. Hit create, and we're good to go. That's it. We are now looking at an invoice batch add. Now what this is going to show us is all of these jobs that were in our list. And then we're then just going in and saying, what do we want to invoice for? Now typically, in 99 times out of 100, you would hit add all. But in this case, I already invoiced that social media services. So I don't want to invoice that again. So I'm going to add in all these other ones, including my North Shore Auto Group retainer billing job for $10,000. Add it in. Now, if I want to edit these, which there's no real reason you would want to, but if you did, you can edit each invoice right in this line, and this is going to be much more applicable in some of those time and materials and project-based multi-job invoice we'll look at in just a second. But in this example, this retainer, all we're doing is we're selecting all the retainer jobs, hit batch invoice, hit add all, which is typically what you would do, or add them in one by one. Click submit next. And we now have all of those invoices created. We are now looking at the Invoice Details page for our May 1 retainer. Now, sorry, my apologies. We're looking at the Invoice Details page for a specific job, and it's part of the May 1 retainer batch, the overall invoice batch we did. Notice that we're looking specifically at the NAGR billing job, the invoice for $10,000. Now, the workflow process is going to be to either print this off, produce a PDF, save it, attach it to an email, and so forth. Typically, or what you could do is select to notify client. But what I'm trying to get at is that down below in the invoice, in the sub components, we have the batch, and this shows us a list of all those jobs and each of the invoices. And I'm able to quickly jump into each one. Hit print or notify, jump into the next one. Hit print or notify, jump into the next one, and so forth. You can also look at the printouts and choose to, I want to print invoices for all. I want to print all invoices, and it's going to generate. So I was expecting a whole bunch of invoices there. Invoice printouts, batch invoice, print invoices for all. But to be honest, I'm not really sure why it's not giving me. I was expecting literally 5 PDFs to pop up there, and I'm only seeing one. Not entirely sure why, so we'll have to check on that, because clicking this button should actually give us all 5 PDFs all at the exact same time. But the point I'm trying to make is that we've done a batch invoice, and we're looking at the invoice details page for each one, but we can look at the batch and jump in between them, and then either notify client or produce the PDF, save it, and attach it to an email. But all these invoices are all created. The quickest and easiest way would probably be to hit this button, print invoices for all. It's going to produce PDFs for all of them. You can then save them, attach them to emails. Or if you can use the notify client, that's even better. If you can literally go through and select this, hit notify client, send it to the client, go on to the next one, hit notify client, and so forth. You're just sending out, we've generated 5 invoices all at the same time. We're just sending them all off now one by one, because they're all for different clients. Now, if they were all for one client, we could generate one invoice. If you at the end of the month, you have 2 retainers, 2 time materials jobs, 1 fixed price, and you want to invoice them all at the same time, you want to put them all in one invoice, you can do that too. And we can touch on that just a bit as well. It's basically, if you have all the invoices for the same client, it's going to give you the option to produce a single invoice as opposed to multiple. So that's that process for doing multiple retainer jobs all at the same time. You pull them all up, you select batch, invoice, add, and you invoice all of them for 100% of estimate. Any questions I can answer on that, Emma?
No, I admit I was answering a question for Lisa on a bit of a different subject, but from what I was hearing, that all made sense, and we haven't had any questions come up on it, so you must have done a fabulous job as usual.
Awesome, thank you very much.
Thank you.
Okay, well, let's take a look at invoicing multiple time and materials jobs. So the next scenario is, we have a bunch of jobs that we're doing for clients, and they may be all for different clients, and we're billing all of them time materials, and it's the end of the month, and we have all these jobs that we want to just bill for the remainder, all the unbilled time and expenses for that month. It's similar to what we just did, but what we're going to do is we're going to do a job find, and we're going to say, show me all of the actual billing jobs. Actual billing representing jobs that we plan to bill all the unbilled time materials, oftentimes monthly or maybe quarterly. But show me all the actual billing jobs that are open or in production. Click Find, and that produces the results of our search. So I have 17 jobs that meet that criteria. I'm able to see, these are all actual billing jobs. You can see the client it's for, I can see the status, the due date. I can then see the estimated value, the actual value, variance, how much you've invoiced already, and a balance outstanding. Now, this balance outstanding is a comparison between the value of the work that we've done and what we've invoiced. In cases where you see a negative number or a number in brackets, that's letting us know that the value of what we've invoiced is less than the value of the work that we've done. In a case where you see a positive number, it's letting us know that the value of what we've invoiced is more than the value of the work that you've done. Probably pretty rare, but if that's what it means if you do see that. Now the process is similar to what we were just looking at a second ago. We're going to go up. We're going to do a batch invoice add. Now, because we now know that we are invoicing for actual billing jobs, looking at our cheat sheet, actual billing is remainder from actuals. So just like the single invoice, the batch works the exact same way. This is going to be remainder from actuals May 1. And just like before, just like when we did the single invoice for the actual billing job, in this case we're doing a multiple, but it's just the same. We do remainder from actuals, and that's it. It's 100% of the remainder from actuals. We hit create, And that brings us to our batch add. Now this is now showing us here a list of all the jobs. And we can then see, which ones do we want to invoice for? Well, let's go ahead and let's add in all these jobs that we want to go ahead and invoice for. So, I can add them all in, or I can hit add all and just add them all at the exact same time. So I've added in all these invoices. Now let's say that I want to tweak them a bit. I'm invoicing $3,400 for this corporate website. Now we put in $24,588 worth of work. We've already invoiced $21,905. The variance is $34,18. So let's say that I then want to go ahead and tweak this a little bit. I can choose to edit the invoice. I can edit all of them. I can go in and see where those values are coming from. That $34,18, where is it? What's it being made up of? Well, it's $600 in research, $300 in coordination, $1,225 in design. If I want to know what is the $1,225 in design, we've actually gone way over in this. We're under in other areas, but we've gone way over. What's been done? I can click on the arrow and see all these timesheets. Just like before, if I want to open this up, then I can go ahead and choose which ones I want to bill and which ones I don't for all the different services. So you still have full control, even though you're doing a batch invoice, which does a lot of the calculation for you. You still have full control over that. In this case, I'm just going to click 100% of actual and just do what we originally intended, which is that $34,18. Oh, here's a good example. I was mentioning this to Emma before we hopped into our webinar today, and that was that I was noticing as I was doing some prep that I didn't have some services tied to income items in QuickBooks, and I was saying I might actually get an error when I try to do that. And then I was thinking, should I go in and fix that? And then I thought, well, one, actually, to be honest with you, I didn't have the time because I didn't notice the problem until about an hour ago. And then two, I thought, what, this is actually a good example to show a really common problem that clients get. And when they get it, they give us a call because, hey, they're doing an invoice and the system's not allowing them to do it, and they're not quite sure why, and they want to know right away what the problem is, understandably. Now, what the problem is right here is that I'm trying to invoice for a service line that I do not have an income item tied to. So I need to then tie that service line to an income item. Now, I don't have, this SDS local nonstop. I'm not even sure what that is. So I'm just going to put it to professional fees. They're tied to the generic income item of professional fees. The videos I was talking about earlier cover this in extensive detail. I highly recommend watching them. Save that. That actually might not be the only case. When I click submit next year, it might actually not allow me to do this. But let's take a look. So again, just to recap, I pulled up a list of all of my actual billing jobs. I hit batch invoice create. I put 100% of remainder from actual because we're billing all of the unbilled time and expenses. And then if I scroll down here, I can see some of these are zero because some of them there isn't unbilled time and expenses. So therefore, it's we're just not going to generate an invoice value for that. But I hit submit next. So it actually looks like that was the only item that wasn't tied to a service, or the only service that wasn't tied to an item. But that has now brought us to the invoice details page for the top invoice, which is our internal signage program. Notice the RFA May 1. This is the invoice batch. And just like before, I can see a list of all of the invoices that we generated here. These are all the invoices that we generated. And then we can then go ahead and jump to each one and select notify client, or jump to the printouts, and we will get this fixed for you. So when you hit print invoices for all, it'll generate, in this case, all 17 invoices. And that's basically it. You're selecting the invoice, hit notify client, or you are choosing to generate that PDF and attach it to an email.
Hey, Mark. Oh, yeah. Hey.
Yep.
We're great minds think alike there. We didn't have specific questions about that, but Betsy had observed, and I admit I didn't, that she wasn't seeing us applying taxes or putting taxes in. But everything you've shown today, I assume, could be tax applicable if clients on the call today do charge taxes on any of these things?
Yeah, definitely. I often keep taxes off. In fact, today I've had some taxes on a couple of these invoices, which is a bit uncharacteristic for me. I usually keep them off just because, and when I'm doing examples, is because, some agencies have some taxes sometimes and not other taxes other times. I mean, you look at the tax scenarios in, say, Florida or California, and they're, way more complex than, say, taxes in, Texas or what's another state that has really simple taxes? No, I can't think of any right now.
That's okay.
But of course, the tax scenarios in the system are very accommodating, accommodate whatever kind of tax scenario you have. Now, what is the most important here is that the jobs that you've set up. Let me pull up one here. I'm not sure if any of these are going to have taxes on it. But what is most important is that the tax is set up at the job level. So as long as I have my tax group set up appropriately at the job level, that is the most important thing. If you have taxes set up appropriately at the job level, you can do a multi-batch invoice, and the taxes might be different for all the jobs. Maybe you have some jobs. I mean, it can get really complicated. I mean, you might have within a single job, you could have some services that are taxable and some that are not. And that job itself may be taxable. So if the job is taxable, I have an example called GST. It's, stands for Government Sales Tax. It's kind of a generic example. Now, if maybe you have 10 services under this job, only 5 of them might be applicable for GST. If you have set that up appropriately in the admin section for the services, if you've gone in and chosen which services are taxable and what taxes apply to them, then that's going to be calculated correctly if you have the appropriate tax group on the job. Now, when I go to added estimates, so if I hit add estimate for Great Atlantic Insurance, then the tax group is going to fill in. Am I seeing here? I can't recall. Actually, my apologies. Yeah, it's on the job level, not the estimate level. But the tax is going to fill in automatically based on whether or not you have the tax set up at the client level. So if you have for the client, what is the client's tax group? There could be combinations. I mean, you could have some serious tricky taxes here. If you have the tax group set up at the client, it's automatically going to be set up on the job. If you have the tax group on the job, then it's automatically going to be calculated when you generate that invoice. So if you're doing a batch invoice for 20 jobs, and of those 20 jobs, 10 of them are taxable. Within those jobs, some of the services are taxable and some of them are not. What matters is that on the jobs themselves, you have the correct tax group selected. So that's really the most important thing, because the batch invoice add is, it's not really applicable to select a tax group because you could have different taxes for each job. So the most important thing, and I sound like a broken record here, the most important thing is to have the tax group selected at the job level.
Thanks,
and
Mark.
Make sure everything's calculated for you.
Thank you, Mark. Another question that came in from Alex. Now, Alex admits that this is a little bit off topic, but I'm hoping you can answer this one. Alex is wondering how much information or how much account information, excuse me as I lose my voice, is shared when you're syncing between Function Point and QuickBooks. Now, we may have a document on that may be covered in one of your videos, or it may be a quick answer. I'm not sure, I admit.
Yeah, no problem. One thing I want to mention, and this is something that I was kind of expecting to come up around some accounting and QuickBooks specific questions, but that is, and I don't want to defer or not answer the question, but that is something that is going to be covered very extensively in the next webinar next Thursday. Alex, yourself, or anyone else, if you can't make it next Thursday, it is going to be recorded. However, I would really suggest that if you can, please do make it to our webinar next Thursday. This webinar here is a prerequisite to make sure that all of your invoicing and all of your expenses are set up and correctly. You're comfortable with it, because if you're not generating invoices and expenses, you can't integrate with QuickBooks. But to answer it at a high level, the information that goes over is the dollar value tied to the income items. Now, the income items are tied to services. So let's look at this job here. I have a job here, dealership signage, and let's look at this invoice here, 126. What we're going to see is this has services and function points that are tied to the income items in QuickBooks. Those income items are tied to revenue accounts or sales accounts or income accounts. The The service and function point is tied to the item in QuickBooks, which is tied to the account. So the information does come in, the dollar values come in to the item level. It's not just dumping a lump sum into a single revenue account. It is bringing over, all the detail. Taxes will be brought over. The job description will be brought over. The client will be created if it doesn't exist. The job will be created if it doesn't exist. If any information already does exist, it will be used. If the client exists, it'll be used. If the job exists, it'll be used. If the invoice number already exists, so this would be an example, this would be editing an existing invoice. So there's an error or you need to change it. You change the invoice function point, it automatically updates the corresponding invoice in QuickBooks. On the expense side of things, the expenses go into QuickBooks as a bill, and they're tied to cost of goods sold. And just like the invoices, each line item goes into its own specific cost of goods sold. So it's not, again, it's not some really simple level where it's just dumping a dollar amount into a single revenue account. It is bringing it over line by line, exactly as you have it in function point. So I hope that answers the question. Alex, if you want to, if it didn't, if you want to reach out to us after the webinar, if you want to, maybe we can provide you some additional information before the next webinar, before next Thursday. But please do check out the webinar next Thursday, and also watch the videos, because the videos actually do cover some of that, and they cover that mapping in a very fine level of detail. So I think that's going to be important for you to check out. I think that video might actually answer your question as well.
Great, Mark. Can I ask you another one?
Yep.
I know we've got a few people that are popping off the call because we're just past the top of the hour. So to Sharon, who just reached out, yes, everything is being recorded. You will get, I will be posting that recording. I have to convert it. So sorry, Mark, I'll ask you a question in a minute.
Sure.
I have to convert it. So it usually takes us about a business day to get it posted, just because it needs to be changed formats. And then there will be an email coming from GoToWebinar. I think it may be coming from HubSpot, with links back to documents reviewing what Mark goes over today. So, and anything that you receive that you want more info, Sharon, feel free to just drop me a line. It's just emma@functionpoint.com if you don't receive information you needed to receive from today's call. But understand that you need to jump off. Had a question from Dawn, which is a good one, and you are so wise when it comes to Function Point, Mark, that I thought would be one to pose to you. So she was talking about how sometimes design in her company can be taxable, and sometimes it isn't, depending on the job. Now, in my mind, she could set up sort of a taxable version of design and a non-taxable version of design, but would that be your recommendation, or recommend maybe go job by job to apply taxes to design, or not?
Interesting. That's a really good question.
Yeah.
I'd be curious to know what state you're in, Don. Just so I know what
Oh.
another example of a tricky tax state.
She is in South Dakota. She is speedy on the answers there. She is in South Dakota.
Oh, cool. Okay, good to know. All right, yeah. So to be honest, it's not jumping out at me right away, but here's what I'm thinking. I'm thinking that what you would probably do is you would create a new tax group. Now, it could be the same tax. I don't want to spend too much time on this because we're really running out of time. Maybe we could take this offline. But you know what I think? Okay, so here's what you're going to do, Don. You want to create a separate tax group. In that tax group, you want to add whatever tax is applicable for design. You'd want to add. Actually, wait a minute. Now that I think about it. So
I didn't mean to stump you there, Mark. I thought it was a good question, but certainly don't want to fluster you after all the great talking you've done already. We can always talk to Dawn offline if needs be.
I think that'd be the best thing. One thing I just think I came up with an even simpler solution. I mean,
look at you.
And you know what? I think we need to know a bit more. We do need to take it offline. But I mean, if it's as simple as sometimes it's taxable and sometimes it's not, then all you would do is just if it is taxable, then you would have the tax group on the job. So if it is taxable, then the job would have the appropriate tax group. If it's not taxable, in that case, then you would just take it off, and you just make the job non-taxable. Now,
yeah.
I realize that it might not be that simple. If you're telling us that, hey, let me use design versus I don't know, an expense or another service. Maybe you're telling us that, hey, sometimes design is taxable and sometimes it isn't, but copywriting is always taxable. Therefore, taking the tax group off the job is not possible because copywriting is always taxable, but design is, and sometimes design isn't. Then what you would need to do is you need to create a new tax group. The taxes would be the same, so you load up that tax group with the same tax, and in that group, you would then choose, does this group apply to the services? So you would make it apply to copywriting, but not apply it to design. So in a case where design is taxable, you would choose the tax group where everything is taxed. In the case where it's not taxable, you choose a tax group where only copywriting is taxed. But I'm speaking really fast. I'm not showing it on screen. We're probably going to have to
No,
give you some more
okay.
detail on that later on. So let's connect offline and we can help you out with that.
That's great. Thanks, Mark.
No problem.
Yeah, we're getting a few more questions in, but like you said, we can maybe stop sharing our screens and stop talking and answer questions sort of as people are typing them in, whatever you prefer. Are you starving yet?
I'm a little hungry, but no. Let's what I want to do here is I want to make sure I cover the deposit.
Oh, great.
I
Okay.
really want to make sure that I cover the deposit. So I'm gonna jump right into that right now,
Okay.
and then we can answer some of the questions that we can get to. In fact,
Okay.
there's actually a few more items that I need to touch on. One thing I want to touch on really quickly is a multi-fixed price job. This is an uncommon scenario because typically when you're doing a fixed price scenario, it's not going to be simple. Sometimes it's going to be 50%. Sometimes it's a random number based on a client agreement. Sometimes at the end of the month, you're billing some jobs 50% and some jobs 25%. But if you're doing a multi-invoice for a project-based or fixed price job, just like before, you would search based on work type and you search based on project-based. Say all project-based that are open or in production. Click find. Here's a list of all of those jobs. You would then go in and do a batch invoice add. Let's call this project-based May 1. Now, this isn't really relevant because I'm going to need to edit them all. So I'm going to hit create here, and then I'm going to, whatever jobs I want to do a project-based invoice for, I'm going to add them in. So let's do maybe 3 here. So I'm going to add them in. But then what I need to do is I need to go in and edit it. So this first one, this summer driving school program brochure, I want to bill 50%. So I'm going to put in 50% and bill 50%. 50%, click on estimate, hit save and close. That's 50% of my project. This mall brochure, I want to bill 25%. So I'm going to come in here, and I'm going to put in 25%, click on estimates, calculates 25%, save and close. So what I'm doing here is this is less time consuming than doing them one by one because it allows you to quickly go in and put in the percentage or manually type in the numbers for all these jobs without having to navigate away from this one page. So that is a quick and easy way that if you need to invoice a bunch of project-based or fixed price jobs all at the same time, then you can pull up a list and then hit add for each of them and then go in and edit each one invoice by invoice without having to go and do them one by one. One thing I want to touch on that relates to the multi-invoice and just invoicing in general is how you know when and what to invoice. Now, this is something that is, it's really hard to give it a definitive answer. And we try at Function Point as often as possible to give you one answer to a question. But sometimes it's just not possible. Sometimes we have to say, well, you could do this or you could do that. And here's a scenario. Your project managers or your account executives or whoever it is responsible for telling the bookkeeper what to bill and when to bill and why to bill it. Now, a really common way is for let's say, an account executive or a project manager, if they have the access level to do so, to pull up a work in progress report. They're going to pull up a work in progress report here, and they're literally going to pull it up, and they're going to print it. They're going to hit print, and they're going to send it to the printer. And then when it comes out of the printer, they're then going to come in here and they're going to write in. They're going to pull out their pen and they're going to write down, bill 50%, bill $5,000, bill $450. Don't bill this one, bill that one. Wait for give me 6 hours to find out if you should bill this one or not. Because oftentimes it's the account executive or the project manager who is responsible for telling the bookkeeper what jobs to bill, how much to bill them, and why to bill them. Now that's the old school way. produce a PDF report and write it down. And there is nothing wrong with that. And sometimes that's the only way to do it. Another way to do it is to use a system I was about to say a bit better, but I don't even know if I want to say that. But just to do things electronically. I might do a job find. And I might say, well, I'm going to do a job find for all the jobs where I am the account executive. So all of my jobs that I'm the account executive that are open or in production. And I'm going to click find. And I have 22 jobs where I'm the AE, and I need to let my bookkeeper know which ones are we going to, which ones can we bill and how much can we bill for them. So what I might do is I might edit my columns here. And maybe I don't, need some of these things. I want to add in some columns and take out some columns, reorder them, and so forth. I'm then going to produce a PDF, and then I'm going to write in right here, bill 50%, bill $500, bill $10,000, and so forth. I'm writing it down on the piece of paper and handing it to my bookkeeper. But another option is for me to do this exact same find and select Editable List View. And as an account executive, I've pulled up a list of all of my jobs where I'm the AE. I'm then going to select an editable list and come in here and say, this one is ready to bill. This one is ready to bill. This one is completed. This one is ready to bill. Now, how much do we need to bill for this one? Well, this one, bill remainder. And this one, bill final, or bill, all the time. And then this one here is, bill $2,000. And I'm the account executive. I pulled up all the jobs with my name as AE. I'm changing the status for the ones that need to be billed as ready to bill, and I'm putting in a description of what to do. Then, when the bookkeeper or whoever is responsible for, doing the invoicing, when they do a job find for all the active jobs, they're going to be able to see that description and see, okay, well, they would do a job find for all the jobs that are ready to bill. So they would do a job find here and say, show me all the jobs that are ready to bill. Click find. Here are all the jobs that are ready to bill. I then go ahead and do a batch, or I select them and invoice them each one by one. And then once I'm done invoicing them, I need to then go back in and say, this is back to open. This is back to open. This is back to open. So it's the AE or project manager or whoever that's pulling up a list, editing the status to ready to bill, putting in a comment as to what to bill and why. The bookkeeper goes in, follows the instructions, creates the invoices, and then changes them back all to an open status. You may even also want to delete out these comments. Now, I understand that this is a bit of work, and for that reason, you may prefer to print out that PDF and just write on the document, bill this and bill that. I mean, it's really up to you as to what you prefer. I mean, heck, the AE could also just send you an email and list all the jobs, a little comment beside each one of what to bill. So, I mean, there's different ways of doing it. It just depends on your style and how you want to. I know we're running out of time. I'm going to move on really quickly to deposit invoicing. So let's jump into first creating a deposit at a project level. Let's say I have a project called New Website Development, and this new website development has a budget of $50,000, and we're going to do a deposit of $25,000. Now, the whole purpose of the deposit invoicing function point is that it's considered unearned revenue. The value of the deposit, if you're integrating with QuickBooks, is going to go into a current liability account. Advanced customer payment is often the name of that account. So it's a current liability account. It represents unearned revenue. So let's say the client, and now a lot of agencies don't need to do this. If you're doing a project-based job and you tell the client, hey, send me an invoice for 25% up front. Most of the time, just do an invoice for 25% of, an interim invoice for 25%. Don't complicate things for yourself. It's not necessary. Just do an interim invoice for 25% and move on. Don't worry about it. However, and this is typically applicable for cases where there's a lot more, where the jobs are a bit larger, there's a lot more work involved, maybe there's more money involved, and you want to do, you want to look and you want the values that you've invoiced and gotten paid for, you want that to go into unearned revenue to represent work that is advanced customer payments that you haven't actually done the work for yet. It's more sound accounting practice. So what we would do is, let's say we want to create a deposit invoice for $25,000 for this project. And you could do deposit invoice at the company level, the job level, the project level, any level. If I hit add invoice, I can then choose to create a deposit, and that deposit is going to be for $25,000. Select create, and that is then generated for me. Now I have my AR account unmapped. That should actually fill in for me automatically. Typically, you wouldn't have to manually select that. But we've created a deposit for $25,000. Submit that. We would then send the client the invoice for $25,000. Now I didn't put in a description, but of course you probably want to do that. So there's our $25,000 deposit invoice. Now, when this goes over to QuickBooks, it's going to go over as unearned revenue. It's going to go into a current liability account. When you look at the project, you're going to find a deposit invoice tab. That's going to let us know that we have, $25,000 of a deposit. We haven't applied anything to it yet. We haven't applied this to any jobs yet. Now, if we look at our jobs for this, we can see that we have this website design where we've put in $17,400 worth of work. Let's say it's the end of the month or it's the end of the quarter. I now want to recognize this $17,400 as earned revenue. I want to pull away from that deposit. I have $25,000 sitting in a current liability account in QuickBooks. I want that to go over into revenue accounts as earned revenue. What I would do is I would choose to add an invoice. And it's interim and everything's good here. Create that. And then what I'm doing is I'm going to generate an invoice for my website work. And this invoice is going to be less deposit, so $25,000. So I'm going to invoice for this the value of my actuals, my $17,400. Click on the actuals column. I'm invoicing $17,400. And I want, of that $25,000, I want all $17,400 to be taken away from that deposit. Save that. Oh, $17,400, there we are. Actually, that should be 0. Am I getting this wrong here? 25,000. No, it should be 17,400. Oh, it's the taxes. My apologies. Save that. Notice it's letting me know I have a couple accounts missing here. Fill those in. Touch on that in the next webinar. Again, the video will cover that. Save that. And that is my invoice created. Notice that my invoiced total is $0. And it's all related to the deposit. So if we go back to our project details page, what we're going to see is that we have a deposit invoice where we have $25,000 plus taxes, $26,500. We've applied $18,444. That was $17,400 plus taxes. So we can see that there's still remainder on that deposit. When we look at our financials, we can see that we have $17,400 in website work. We've invoiced $17,400. If we were to go to add another invoice for this, let's say we add an invoice for our social media work here. We added another invoice. And we select for social media work. We can then see that the remainder of our deposit is $7,600. So maybe I'm billing, let's say, $5,000. I'm just going to drop in some values here. So I'm going to bill $5,000, and it's going to be less deposit, $5,000, and that's going to mean that there's going to be $2,600 left in the deposit. Save that. Now, when those interim invoices go over into QuickBooks, they're going to pull the dollar value out of the current liability account and put them into the income accounts as earned revenue. And that's the whole purpose of the deposit, is accounting practice. It's going into QuickBooks, into a current liability account as unearned revenue until you earn it back. The way that you earn it back is by creating an interim invoice for the value that you wish to pull away from the deposit. It would typically represent the value of the work that you've done. And then that deposit process is going to work the same at the company and the job level. So if I were to navigate to a job, let's choose, let's actually pull up, in fact, let's add a job really super quickly here. Let's call this, new, brochure. Maybe this is due at the end of the month. And, we plan to do some design, copies, and client management. And this is going to be maybe for like 10 grand. Save that. Maybe they're giving us a $5,000 deposit, so I'm adding in the job. So I have a $10,000 job. They're going to give us a $5,000 deposit. I'd select that invoice. It's a deposit for $5,000. Create that. So that's our deposit for $5,000. When we look at our job here, we're going to find the deposit for $5,000. If I go to add an invoice, then we're going to see our deposit of $5,000. We can choose how much of our invoice is pulling away from that $5,000. Maybe we're billing all $10,000 and we're pulling $5,000 out of the deposit. That's going to leave us with a $5,000 invoice plus taxes. So that's the, again, the purpose of the deposit is that it's going into QuickBooks as into a current liability account as unearned revenue, and we are then earning that revenue by creating interim invoices for the value of the work that's been done in the period and pulling that value out of the deposit amount. And QuickBooks is going to do that for you automatically. When you post this over to QuickBooks, it's going to pull those dollar values out of the current liability account and put them into earned revenue. And what we will see on the next webinar is an overview of that process. So we're going to see the deposit invoice go over into QuickBooks. We're going to take a look at it in QuickBooks. We're going to look at it in the advanced customer payment current liability account. We're then going to create an interim invoice, pull away from that deposit. We're going to look back at QuickBooks and see the deposit, the advanced customer payment, no longer be there, and it's going to be over into the interim invoice. And both are going to add up to, in this case, $5,000. So I'm going to give you a really good detailed example of exactly what that looks like in QuickBooks. So I know I've been kind of babbling on a little bit, and we're pretty much completely out of time, but another 4 minutes or so left. Emma, any questions I can answer in that time?
Hey, Mark, probably not anything that can be answered in that time, but we've got, you and I have been making notes of a couple of things that we can take offline. And so we'll probably end up shutting the session down, but we'll reach out to people maybe via email with some feedback on stuff that's been asked that we weren't able to address during the call.
Okay, awesome. Well, I really appreciate everyone's time today. One thing I'll mention is that I in my planning, I was expecting to kind of get through some of these items a little bit quicker, and I guess I just underestimated the amount of time it was going to take. So I had to really plow through the deposit stuff, and I didn't want to have to do that. So I do apologize for my time management, everyone, but I'm more than happy to take things offline, like Emma said, and answer any questions anybody does have. And keep in mind again that this is a 3-part series, so I can definitely touch on some of this invoicing stuff again before we jump into the next one, where we're going to be looking at the actual QuickBooks sync. I'll do a recap so that everything's clear on what the invoices are and where they're coming from and the purpose of their creation. And we'll make sure to do a bit of a job on our time management in the next session so that we don't go so far over.
Okay, and Mark, I just want to mention, are you done presenting? Because I might just take it back for a second just to show the screen with what our next session is all about.
Yeah, go for it.
Okay, let me see if I can figure that out. Make myself presenter. Okay, should be able to do that. Excellent. Okay, and hopefully, Mark, you're seeing my screen with just my mouse moving there.
Yes, I am.
Okay, perfect. So that's just information for everyone. Our next session is same time next week on Thursday at noon Pacific, and it's called Press the Easy Button. It's all about using FP Accountant. So hopefully everyone will be able to join us on that one. Those 2 videos that we really recommend everyone watch, you can find them either on the sign up page for the webinar, so that original landing page for where you signed up, or they are also available in the help section. They're also available under the What's New. So if you hover over help in your own FP system and choose what's new from that drop-down menu, you will find them. They're just from a few days ago and named accordingly that they are videos and they are related to QuickBooks. So hopefully everyone will get a chance to watch those before the next session. Excellent. Well, Mark, should we stop talking and then leave it open for a few more minutes to get the last questions in? Then you and I can divide and conquer the questions that we're taking offline.
Yeah, sure. Sounds good. Again,
Okay.
thank everyone for your time today, and look forward to continuing the series with our next webinar next Thursday.
Great stuff. Thanks, everyone, and thanks very much, Mark. That was really informative. And we'll stop recording, and this recording will be posted probably tomorrow, and we'll see you all next week. Thanks.
Sounds good.